Hey everybody, welcome to the first episode of the Fred Tischauer No Nonsense Financial Freedom Podcast. Please like, share, and subscribe as we go on our journey of educating the next generation of realtors and investors. Fred, thank you very much for being here.
Thank you for having the opportunity to experience what a real craftsman is like you. Thank you.
No problem, Fred. Fred, social media is flooded with creators telling kids to wholesale houses with zero money down, creative financing. From a 40-year perspective, what are the hidden legal and financial traps of these strategies?
Well, for one, I am not a big fan of wholesaling. I think that in this market, especially in this market, anyone that lists their property, a real estate agent, including paying the commission, the closing costs, will end up with a lot more money.
What do you mean when you say this market?
This market because, number one, the number of properties in their lower price point they're gone at the same day, meaning that they'll get a lot of multiple offers because our inventory is very low in the lower price point. So it's just, to me, it makes a lot more sense at a minimum to get the expertise of a real estate agent to give them their opinion what a property is worth, and then the people can decide. There's no harm by getting a real estate agent to work with them, a reputable real estate agent that will have their back. See, that's what I like about anyone that's thinking about wholesaling, to make sure they find an agent that's knowledgeable on this investment niche and have them get their opinion. It doesn't cost them anything. Then they can decide, hey, this is something that I think they give me a fair offer or not.
What can homeowners who are thinking about wholesaling ask agents to vet them and make sure that they're going to have their best interests in mind?
One is, I think any agent that has a little bit of common sense, someone's got a little bit of history, a little bit of knowledge, and has been around the block, they'll have their back. Have their back.
Yeah, but what questions can a homeowner
I'll
ask?
find out and say, tell me what kind of experience you have,
Yeah.
how long you've been doing, or do you work with any investors? Are you an investor yourself? Have you flipped any houses? Tell me, what do you think of this market? What if I want to buy some rental properties, what do I need to be concerned about? Should I do they talk about, no inspections, for example, no sewer inspections. A real estate agent will have your back, will tell you, don't buy the property unless you do take care of the due diligence. Most people get in trouble because they don't have any clue, because they feel like they're pressured. They have to buy something without any inspections. So an agent that's knowledgeable will have their back, can explain the different steps that are required to buy a property like this. They will be in very good hands with an agent.
Yeah, I think that's so important to look for an agent who at least has a couple investment properties themselves.
No doubt.
Because it's one thing to learn it, but it's another thing to do it and to experience it and be in the nuts and bolts of a situation.
Right.
In your book, Flip or Hold, you state that flipping houses isn't actual investing. Can you explain why a serial flipper starts at zero every single January, and while a buy and hold investor is actually building permanent wealth?
For example, when flipping is like having a job. If you don't flip, then you're not making any money. Whereas buy and hold, that's where you start to create the wealth creation, retirement, and financial freedom. I think that people need to understand the two. Both can work hand in hand. But the inventory today to flip is not as great because people are getting way too much money for their property, so the spread isn't very good. So again, if you're thinking about creating wealth, you can afford to pay a little bit more for that property over, amortized over 20, 25 years. If it's $10,000 more, it might be $70 more a month.
Right.
But when you're spent $10,000 to flip, that's a lot of money.
It's a lot of money.
They go through the materials and paying part of the contractor, stuff like that. So both go hand in hand. I flipped a lot of houses, and I still got a sizable portfolio. I've done over 150 flips. I never stopped. I don't do it, but
right.
So that's why I think both are very good.
Okay.
At the same time.
If you're looking to buy a flip house, is it better to buy a wholesale property or use a realtor?
Again, I think using a realtor, you'll never go wrong. You know, there may be some exceptions. I think if you're serious about this, keep in mind that wholesalers have one goal in mind. They're number one, and the buyer's number two.
Right.
When you have a real estate agent, it's the opposite.
I see.
The client is number one. So
unless you have a very deep, thorough understanding of investing investing in real estate, would you say that might make sense to buy through a wholesaler?
It depends. It depends. You know, I don't know what the prerequisite requirements that they would allow, like inspections.
I see.
You know, keep in mind that they want to get rid of that property. Most of the time, they may use a hard money lender.
Okay.
And they got so much time that they got to get rid of their property. So I don't know, case by case. I just think if it was me, I would work with a real estate agent exclusively.
Right. If a young professional came to you, they've got $10,000 to $15,000 saved. What exact credit, liquidity, and emergency metrics must they hit before they write a single investment property offer?
Well, I think number one is they have to understand is, do they own a home, first of all? In
this situation, no.
So the first thing I would advise is for them to buy a property, FHA, 3.5% down. If you have $200,000 property, that's like 3.5%. What is it? $7,000.
Right.
For example.
Right. For an FHA loan.
For an FHA loan, $150,000. So that would be my advice. We have to sit down with them. I don't know what their income level is. We have to find out their credit score, because you can have money, $50,000, but if you got a poor credit score, this isn't going to work.
What credit score are you talking about?
I'm talking about probably in the 700s.
Okay, so you need
for FHA is a little bit lower, but
okay.
But it's probably, I think, 6.25 minimum.
Okay, and now what about somebody who already has a home,
mm-hmm.
and they have about $10,000 to $15,000 saved up? What credit, liquidity, and nest egg would you be looking at to have them start investing?
Again, you have to determine, do they have liquid $15,000? Do they have access to a HELOC, line of credit?
Okay.
What their credit score again?
Right.
Now, that's a different ballgame. If they're going to buy an investment property, their credit score probably has to be in the 700s. Probably,
okay.
You know.
Okay.
Now, there is some creativity. There's called a debt service coverage ratio loan.
Okay.
That's kind of not a new thing, but that's you still have a decent credit score. But when they buy a property, it's all based on the income the property generates.
Right.
So that's, to some people, that's a good thing. The interest rate will be higher, but they can buy a property, DSCR, and they can qualify because it doesn't matter how much money they make on their job.
Would you say that that's a good option for some people?
For some people, yeah.
Okay.
For some people, yeah. Yeah. I don't have anybody, the clients that I work with, do DSCR loans.
Okay.
That's kind of more like, goes hand in hand with a lot of the creative financing you mentioned.
Mm-hmm.
But I personally think that having relationships with a local bank, is the way to go. You know, if they have enough equity, they have decent financial statement, I think that this is wide open opportunities for anybody. If you're willing to work hard, a great opportunity to get in this market today.
In your book, Follow the Golden Brick Road, you talk about taking absolute control of your bottom line. Why do you believe traditional retirement vehicles like a 401k leave people vulnerable to inflation? And how does real estate solve that issue of inflation?
It's a good question. I always tell people, do you want to be in control of your own financial future or leave it up to someone else? That's the key.
Okay.
I chose this path because I think I know my financial needs better than anybody. For example, I'm not opposed to the stock market, but if you think about the stock market, if you want to buy $100,000 worth of stocks, you got to have $100,000 worth of money.
Right.
If you want to buy, if you have the same $100,000, you can buy $500,000 worth of real estate. And I want to bring a chart next time. you could see the percentages over 15 years. It's off the chart.
Right.
Because even if the stocks go up 8% a year, it won't even come close to what real estate could do because you're using the power leverage. In the stock market, you don't have leverage.
Right.
So that's the key difference. Someone has $20,000, you put in the stock market, you think about what that's going to do for you. Not that much. The same $20,000, you can buy $100,000 real estate. That's why I think the two, for me personally, in comparing the two, I prefer real estate, and it's never served me bad over 50-some years that I've been doing this.
Where does inflation play into this?
Inflation, it plays into the prices go up in inflation.
Right.
And the rents go up. So the people that get hurt are not the people they've had real estate.
Right.
The ones who want to get started, they're the ones that might have tougher
time getting into it.
Getting into it.
So comparing a 401k and having real estate, would you say 401k has a better or worse inflation rate than real estate, generally speaking?
I don't know that much about, I know the 401ks. I know that it still goes hand in hand with the volatility of the stock market.
Okay.
So unless they have other investments, that most of the time it's all tied to the
inflation rate.
Yes. So again, well, you have 401. Now, on a 401k, if corporate America, the matching is not what it used to be.
Right.
They used to match, whatever 5%, 3%. Now I don't think there's much of the matching goes on. So the person's the one he's putting his own money into his 401k. So that's a big difference now.
In your book for real estate investors, Clients for Life, it heavily focuses on agents. Why are most realtors trapped on a commission roller coaster with retail buyers, and how do they pivot to investor clients?
That is an interesting question. Part of it is real estate agents are no different than the general public, for one. If you think about what's going on in overall society, people today are concerned about retirement, living paycheck to paycheck, job concerns. They may make a great living in their job, but they're still living paycheck to paycheck. Real estate agents are no different. Mm-hmm. Yet, it makes no sense to me why more agents are not involved in investing for their own future. If they could just put 15 to 20% of every commission check, put aside, save enough money for a down payment, buy one rental, then buy two, buy three, get to 10. That's a couple $1 million worth of real estate in a six-figure retirement income. So they could supplement. There's a lot of people that work and then they get laid off, and they don't have a backup plan.
Right.
And real estate agents are notorious for that. Mm-hmm. They may have a big house, a fancy car, wine and dine, stuff like that. And perception is not reality. So to me, it makes absolutely no sense, because for a real estate agent that already has a very good client base, they never have conversations with their clients about, hey, tell me what's going on. What do you think of the economy? And they're going to say, I'm concerned about it. What about the stock market? Are you investing in the stock market? Yeah. Do you understand how the stock market works? Most people don't have any clue.
Right.
So what are you doing? What about a college education plan for your kids? Do you have one? No. And what happens if you lose your job? Would you be able to maintain that lifestyle?
Right.
Probably not.
Right.
See, all these questions is a great to come back and say, if I can help you and show you how real estate can help you accomplish those goals, your concerns, would you be opposed to me sitting down and talking about, I can tell you how real estate really works to help you with college education? Maybe you could flip a house. Maybe if you buy a house now, your kid's 2, 3 years old. By the time they're 18, you can have this house paid for, and that's your college education.
Right, for your kids.
People just don't get it. And agents are not doing a very good job of explaining why real estate is the number one investment option. According to Gallup, 12, 13, 14 years in a row. There's a reason for that. It's much easier to understand, for one. People understand how real estate works. They don't have any clue how the stock market works.
Right.
So, again, the whole thing comes down to, you want to be in charge of your own financial future, or you want to leave it up to someone else?
So for some agents who maybe feel ill-equipped to talk about real estate investing, what would be a good step one for these real estate agents to get into investor clients?
One is, I might be biased, but I think I probably do as good a job as anybody on a national basis. I wrote the book Clients for Life. It's the only book written for real estate agents. Take my classes, participate in the seminars that we do, learn. Don't be bashful. Swallow your pride. Let someone that has that expertise on a local basis to teach you what works and what doesn't work. Because we get into all the traps you talked about, wholesaling, advantages, disadvantages. We talk about the whole thing, but the main thing is learn slow and steady. Help people one at a time. Don't worry about a commission check. You'll get more commission checks you ever thought was possible, because people they need real estate. They don't know why. They don't know why. What can it do for them? Where I have enough experience over 54 years. It means that I'm old, but it means that real estate works.
Right.
I can assure you that if it didn't, I wouldn't be doing this as long. I'm probably one of few, if any, in Omaha that's been investing in real estate as long as I have. That means that I'm not talking about being a real estate agent. I'm talking about Fred as an investor. If it works for me, after 54 years, I can assure you it'll work for you. It doesn't matter, even in this market.
So would you say the first step one is take a course, take your course on investing. This is for realtors.
Working with investors fundamentals.
Okay, so start there.
Yep.
And then what? Don't go, because in my mind, it's don't go get a client who's looking for real estate properties. It's go get your own property and get into real estate investing yourself as an agent.
Exactly. Can you imagine if you asked me the question, hey, I'm excited about investing in real estate. I got friends that have done it. I'm excited. I want to buy a rental property. The first question you would ask me, tell me, how many investors do you work with? Are you an investor yourself? Have you flipped any houses? What are the positive and negatives from your point of view about investing in real estate? Tell me about it. And I think if you're not investing yourself, how can you give that kind of advice? Can you imagine it having $200,000-$300,000 and going to a financial advisor? They just got his license and ask him and say, what are you invested in? Right. Well, I'm really not right now.
Right.
Because I don't have any money.
That wouldn't go well.
So can you imagine? But that's what happens in real estate. See, a lot of real estate agents, instead of saying, you know what, you'd be much better off. There's a few agents in my office that would better suit you to work with them than me. And then, see, that's being honest to say, I don't know enough and I don't feel comfortable.
But you can still use me as a resource because I'm connected.
And you can team up with a real estate agent that is knowledgeable.
Right.
So then I think that people would say, I appreciate that. The message you're giving, I'm not worried about a commission check.
Right. I want to help you.
I want to help you. So yeah, that's the first. It's not complicated. People make this a lot more complicated today than it needs to be.
When a deal lands on your desk, what are the exact 4 or 5 things that you look into instantly to decide whether this property is going to be a good fit or not for an investment property specifically?
For example, I can know the areas.
Okay.
That what properties are selling in that area. This house comes up, and it's, hold on a second, either there's something wrong because what they're asking is way under what property is selling for in that area. It obviously needs work.
Right.
So let's say, you can estimate $30,000 for any house. You can pretty much, fix it up. So that makes sense. If the house is selling for $100,000, you put $50,000 in it, and the house is selling for $250,000. That to me is an amazing deal.
Yeah.
So that's the first thing I look for. And
Does it pencil?
Does it pencil out? Because there's no reason to look at that. Will this property make enough to cover the debt? Cash flow. So that's kind of the first thing you want to know. Will this property cash flow? Because I can tell you a lot of properties that people are buying today, I just scratch my head and saying, how in the heck these people are going to get enough rent to cover their mortgage payment? I saw a duplex for $450,000. There's not enough rent you can get on both sides to cover that payment. And, it makes no sense. You're better off buying two houses for $225,000, and you'll get a lot more rent than you will in a 2-bedroom duplex. That's an example of someone that may not run the numbers, analyze the property. There's formulas you need to look at. What's going to be my cash on cash return?
Right.
What's the debt service? Will this make enough money? What's the break-even ratio? So there's a lot of different formulas that a lot of people don't understand, that when they go through my classes, even lay people, they'll understand they can do their own analysis. I give them, Excel spreadsheets. Then you can say, in 5 minutes, I can tell you if this is a good deal. Now, what they're asking, there's no way it's going to work. Let's see if are they pricing the house reasonable, under market, above the market. Let's say if the property, if you can get it for $10,000 cheaper, or maybe $20,000 cheaper, then it pencils out.
Right.
But if not, you walk away, because rule number one, you fall in love with the deal. People hear it all the time. You fall in love with the deal, not the property.
So the most important thing, is this what I'm hearing from you? The most important thing is what you buy it for.
Exactly. You'll never, when people say real estate is risky, if you buy a property and you get a good deal, you always have an out.
Mm-hmm.
But if you pay over asking price, which has been more common than not, because people are chasing.
Right.
Because they're afraid that, if you offer them what you really should, you're going to try to make that property work. You can talk yourself out of buying it or not buying it. But when you analyze strictly on facts, this property just doesn't make sense. It's your money. You do what you want with it. My advice to you is not to buy it, because you didn't have a property yesterday. If you don't have one tomorrow, the world still goes on, and you're going to be just fine. Mm-hmm. So you make your money when you buy it. You'll never go wrong. You do your due diligence, and people say, is it risky? You minimize the risk, because living paycheck to paycheck is a lot more risk than having a rental property. Tenant selection is the key. A good tenant will not cause you problems. See, the properties are never the problem. The tenant selection causes the problem. Okay? Now, there's areas some people may not want, but for the most part, under market, good tenant selection, do your due diligence, sewer inspection, stop box inspections, contractor inspections. So there shouldn't be that many surprises. They say, oh my God, I didn't know that I was going to have to spend that much money. You already know if it's got a sewer problem or not. If it's got a problem, it costs you $15,000, $30,000, and you didn't do an inspection.
Right.
So here you're going to buy this house to flip. All of a sudden, you spend all this money making the house beautiful, and you didn't do a sewer inspection. That buyer, the owner-occupied buyer, is going to do a sewer inspection. You may find out that you're going to lose money, because then you got to disclose there's a problem with the sewer line. Mm-hmm. So you do the inspection. If they don't want you to do an inspection, then they're hiding something.
Right.
So to me, that's the way it is. When you work with investors, it's not like you're going to have 20 people bidding on a house, okay, like an owner-occupied.
Right.
So, and you have relationships. Agents know who you are. They know that you basically work with people that are qualified. You're not working with people that are doing hard money lending. That's another subject, the creative financing. I don't work with people that do creative financing, wholesaling. That's just me. Other agents may choose to do whoever they want, because I don't need to chase a commission check.
Right.
My real estate is taking care of my lifestyle.
Well, thank you very much, Fred, for taking the time to answer all those questions. So I want you guys to know Retail home buyers move every 7 to 10 years. Real estate investors buy multiple properties a year if you bring them the deal with the right math. Stop trading your weekends for picky buyers. Learn how to speak fluent investor numbers, bring them a deal that makes sense, and build a book of clients for life. Get in touch with Fred. The link for Fred's classes is going to be down below. And we want you to leave a comment as well. Let us know, what do you think of what Fred said? Did anything stand out to you? Do you have any questions? Just put it down in the comment. And please like, share, and subscribe. It really helps us with the algorithm and helps more young investors and realtors figure out how to get into real estate investing. Fred, thank you very much.
Thank you.